Hello and welcome to the Economy This Week series of Drishti IAS. I am Ritu and today's session is about important economic events which had happened in the past week, and this session is important for your GS-3 perspective. So let's move towards to the points of discussion part. So here these are the topics which we are going to cover up in today's session. So we are going to cover up NITI Aayog report on exports, then we are also going to cover up rising geopolitical risk on asset prices. So this is a IMF blog, and then we are going to discuss about traditional staples to diverse crops ICAR, and then retail inflation. So retail inflation we had already covered in our daily program. So here we'll have a brief discussion on the retail inflation. So coming to the first topic, which is NITI Aayog report, and that report name is Unlocking India's $25+ billion export potential in hand and power tools. So this is the news which we are going to cover up. So NITI Aayog has launched a report, and that report is titled Unlocking $25+ billion export potential, India's hand and power tools sector, highlighting a roadmap to boost India's global market share in this $100 billion global industry projected to reach by $190 billion by 2035. So currently we have this $100 billion industry, but right now it is $100 billion global industry, and in future by 2035 it means that in upcoming 10 years it is going to be reached by $190 billion by 2035. So currently India holds a small share, $600 million in hand tools and $470 million in power tools. Compared to China, it's very low, and the report envisions increasing exports to $25 billion by 2035, generating 35 lakhs jobs. So in this particular report, they had talked about the India's growing export sector and how we are able to achieve by 2035 $25 billion. So this is the India's target we have. Then key intervention suggested. So for that thing, what we need? So we need to develop 3-4 world-class tool cluster and 4,000 acres under PPP model. It means that public-private partnership model with infrastructure, housing and logistic facilities. Then we have to also see that how we have to address the cost disadvantage in comparison to other countries like China. So we have to also tackle this issue. So we have to reform raw material duties, easing EPCG norms and improving labor laws. So these things cumulatively affect the cost disadvantages which we are suffering now. Then we have this bridge cost support, 8,000 crore if reforms lag, seen an investment due to high tax return potential, and the sector is seen as vital India's ambition for becoming, because this time India has decided that on the 100th year of its Independence Day, India is going to become Viksit Bharat at the rate 2047. So these all visions will able to fulfill the aim and dream of India to become Viksit Bharat. It means that developed nation by the 2047. So coming to the next one. So as you already know that Drishti IAS has ISGS foundation course which is available in both the medium, Hindi medium and English medium. So this particular thing is available in offline mode. So for English medium 7th May, for Hindi medium 29th April. And for Noida address, we have this address C171/2 Block A, Sector 15, Noida. And if you have any queries related to the ISGS Foundation course offline, you can call us on 87501. Also, this course is available in online medium, which is available on Drishti Learning app. So here you can see that first, we have upgraded few features on the ISGS Foundation course, and the first feature is AI summary. So on the basis of your video content, they are going to provide you AI summary so that it will be helpful in quick revision, especially in prelims examination. Then we have also one thing which is AI quiz. So on the basis of your video content, there will be AI quiz. That quiz will help to test your knowledge. And also we have one features which is ask me a question, and this features enables one that anybody is arising any kind of the doubt, then they can ask this question. Now we are going to discuss on impact of rising geopolitical risk on asset prices, and this has been we have taken from the IMF blog, and this is the news. How rising geopolitical risk weigh on asset prices. Heightened tensions can hurt stock markets, raise government borrowing costs, and pose risks to financial stability. So as you already know that geopolitical tensions are going on, Russia, Ukraine, Middle East, and directly and indirectly so many nations are fighting on. And in fact, USA is also going through the geopolitical tension because of its reciprocal tariff policy, and so many countries are not happy with the USA reciprocal tariff. So in these circumstances, what could be the bad impact we are going to analyze in this thing? So the global economy is increasingly vulnerable to geopolitical risk. These events can disrupt cross-border trade and investment, harming both economic growth and financial stability. They are difficult to predict, occur rarely, and often last unpredictably, making them hard for investors to price in advance. So here, what are the disadvantages we have? That there will be problem in cross-border investment because of the geopolitical tension. There will be also impact on financial stability, economic growth, because we could not trade freely because of the geopolitical tensions. We'll add some more points to it. Impact on the stock market. So definitely it has an impact on stock market, and as you can see that when Donald Trump had announced this reciprocal tariff, we can see that so many countries had saw and witnessed decline in their stock markets. So during major geopolitical events, stock markets tends to decline. On an average, global stock prices drop by 1% per month. In emerging market economies, the average drop is larger at 2.5%. International military conflict have the worst effect, causing a 5% fall in emerging market economies on stock market due to deeper economic disruption. So here what we can see that on an average we are facing the decline by 1 or 2.5%. It depends upon the different kind of the markets. Then if we'll see here, rising sovereign risk. So geopolitical shocks increase the risk premium for government debt. In advanced economies, risk premiums rise by 30 basis points. This time also we had discussed about the 25 basis cut, and in emerging economies they rise by 45 basis points or more, especially in countries with high debt, low reserves, and weaker institution. And when there is a what you can say increase and rise in the basis point, what would be the situation? The situation is that borrowing cost for government will rise and putting further stress on the public finances. So this will happen when there will be increase into the basis points. Now we'll discuss some more aspect to it. Cross-border spillover. So the effect can be seen obviously the cross-border, and if a country's main trading partner is involved in a conflict, it can experience a 2.5% fall in stock valuation. So as you already know that suppose that we have a good trading relationship with the Russia for food products, and Russia is what you can say main trading partner of India in the food products, and if Russia is itself involved into any war kind of situation, the stock valuation will fall by 2.5%. So on an average, sovereign risk premiums in these connected economies also increase, especially for the emerging economies. Here if you'll see uncertainty and investor behavior. So geopolitical risks significantly increase macroeconomic uncertainty. For months, investors became cautious and demand higher returns for taking on riskier assets, shift away from stocks and other risky instruments. And this behavior leads a lot of volatility, a lot of frictions in the market, and market become very much vulnerable to such kind of the situation because of the geopolitical tensions. If we'll discuss that broader financial system impact, so if we'll see in context of the bank, so bank may reduce lending due to lower asset values and increased risk. Investment funds may see redemption and poor returns, causing ripple effect in financial economy, and this can spill over into the real economy, affecting growth and employment. So here what we have found that how everything is connected with each other. If we'll see that what we can done, are we able to find a solution for this thing? So regulators and financial institutions should improve their ability to assess geopolitical risk through stress test and risk modeling. They need to create buffer, larger economy need to create buffer, and countries also need to create reserves, so in any kind of geopolitical kind of situation they can use those reserves. So bank must hold sufficient capital and liquidity to absorb potential shocks. Emerging markets should develop deeper financial market to diversify risk. Countries must maintain fiscal space, foreign reserves and buffer against unpredictable events. So this is what we can do, that here the country must take care of their finances, must take care of their what you can say reserves, and the policies should be there that it should tackle the geopolitical tensions. Now we are going to discuss about the reallocate resources from the traditional staples to more diverse ones, ICAR policy paper. So what this policy paper talks about, that by the 100th year of India's independence there will be the more demand of the food and more nutritious food because of the rising population. And if there will be the more demand of the food because of the rising population, what will impact it has on the agricultural economy? We are going to discuss on that. So as India approaches its 100th year of independence, the demand for food is expected to surge dramatically. And this report highlights the urgent need to transform India agricultural policy resource allocation to meet this future. So here we'll discuss. So doubling food demand, tripling nutrient needs. So total food demand is projected to double by 2047. Nutrient rich foods just like fruits, vegetables, pulses, animal products may see a 3-4 times increase in demand. And why such things will increase? Because of the changing dietary pattern. Examples: fruits from current levels to 233 million tons, vegetables projected to 365 million tons, pulses demand to double to 49 million tons, edible oils and sugar to rise by 50% and 29% respectively. So these percentage shows that we need this much to meet the demand. And now the question is that are we able to produce this much or not? So here if you'll see, less land and more pressure, because what we can see that agricultural land is reducing day by day. So agricultural land will shrink to 176 million hectares from 180 million hectares. So what here we can see that more number of food and fruits are increasing, but here the land which are under the agriculture is diminishing. In such situation, it's a very problematic thing to discuss that how we are able to mitigate such kind of crisis. Net sown area are expected to drop to 138 MHA, and then cropping intensity to increase from 156 to 170%, increasing pressure on land. So what will happen that if there will be less land, then cropping intensity will increase and there will be more pressure on the land, and in that situation the land will not get extra time to what you can say regrow, and extra time to what you can say see the growth of the different cropping patterns. So in such situation there will are the more chances of the soil erosion and land erosion. So if we'll see some more aspect of it, time to rethink resource allocation. So how we can think of the resource allocation: shift focus from traditional staples like rice and wheat to diverse crops like pulses, oilseeds, fruits and vegetables. This aligns with changing dietary patterns and supports nutritional security. So we don't have to just dependent on the rice and wheat, we have to also promote the pulses, oilseeds, fruits and vegetables, because due to change in dietary practices, these foods and food crops are also in the demand. Here if you'll see, livestock and fisheries, the rising contributors. Livestock share in agri output may rise to 39% from 31%. Fisheries expected to grow to 10% share from 7%. So these are also important item for the food crops. So this is also the thing. Then we have smaller farms, bigger challenges. Average landholding size may shrink to 0.6 hectares. Smaller farms make it harder to achieve economies of scale, affecting income and sustainability. So if there will be what you can say small land, then there will be more difficulty to sow, and what we have seen that if there will be a big land, there will be what you can see utilization of less resources, utilization of less mechanization. So here in India we have a very patches of small land, and that creates a problem in agricultural processes, and that will also affect the agricultural productivity. So water and energy stress. So here if you'll see, because agriculture needs a lot of water, So agriculture already uses 83% of India's water. By 2047, water demand in agriculture will rise by 18%. So it will grow around 100%, we can see here. Increased cropping intensity will strain both water and energy resources, and climate change threatens productivity. As you already know that so much of climate change is happening, then definitely we can see their impact on the agriculture also. So in the last 50 years, extreme climate events have cut agri productivity by 25%. Rising droughts, floods, heat waves will make food system more vulnerable. So here we can see that there is a water stress, there is a climate change problem, there is a shrinking land, there is a problem of mechanization, there is a problem of small patches of the land. So these are the problems we have. So here what we can do, so there should be a shift in the policy, reallocating resources towards diverse nutrient rich crops, enhancing sustainability in agriculture practices, adopting climate resilient and water efficient farming, preparing for urbanization and population growth 1.6 billion by 2047. So here we need to adopt all these policies so that we are able to control it. Now we are going to discuss on the retail inflation. So as good news has come that there in the last 5 years we can see that the pressure of inflation has been decreased. So retail inflation eased to a 5.5-year low by 3.34% in March from 3.61% in the previous month, mostly due to the lower food prices. And as we have already seen that there was a change by RBI, and RBI had changed its stance, and right now we are into the accommodative stance, which is a easy monetary policy. So here we can see that vegetable, eggs and pulses were significantly cheaper, though edible oils and fruits continue to see the high inflation. So in this we have to discuss 2 points. The first is the consumer price index. So what it measures, consumer price index? So it measures the price changes from perspective of a retail buyer, and here we had talked about the retail inflation, and it is released by the National Statistical Office. The CPI calculates the difference in the price of commodities and services such as food, medical care, education, electronics, which Indian consumers buy for use, and retail means that daily consumption. So we have several subgroups including food and beverages for these different kind of CPI. So we have CPI for industrial workers, CPI for agriculture laborer, CPI for rural laborer, and CPI for rural urban combined. So this is the thing. So first 3 are compiled by Labour Bureau in Ministry of Labour and Employment. Fourth is compiled by the NSO in the Ministry of Statistics and Program Implementation. So if we'll talk about that, what is the wholesale price index, because CPI is about the retail price index, here we are talking about the wholesale price index. So it measures the changes in the price of goods sold in traded in bulk by wholesale business. So whenever we go for any market, then people always ask that this is a wholesale market. It means that they are purchasing things in the bulk, and it is published by the Office of Economic Advisor, Ministry of Commerce and Industry. It is the most widely used inflation indicator in India. And what are the major criticisms? So major criticism for this index is that general public does not buy products at wholesale price. So this creates a problem, and there is a lacuna in its indexes also. So now we are going to discuss about the practice question for prelims. Consider the following changes highlighted in the ICAR report: declining average landholding size, increasing the pressure on water resources, rising contribution of livestock to agriculture GVA, decreasing cropping intensity. Which of the above are correctly identified as challenges? 1, 2 and 3 only, 1, 2 and 4 only, 2 and 4 only, all of the above. So you can answer this into the comment section. We had already discussed this point. Then with reference to India, consider the following statement: the wholesale price index in India is available on a monthly basis only. As compared to the consumer price index for industrial workers, the WPI gives less weight to the food articles. Which of the statement given above is are correct? 1 only, 2 only, both 1 and 2, neither 1 nor 2. So you can answer. Then we have, according to NITI Aayog report on India's hand and power tools to sector, global tools market is projected to grow to approximately what value by 2035? $125 billion, $160 billion, $190 billion, $250 billion. So you can answer. Then we have consider the following statement: geopolitical shocks raise macroeconomic uncertainty for a prolonged period. The financial sector can use stress test to better prepare for geopolitical risk. The impact of geopolitical event is uniform across advanced and emerging economy. Which of the statement is are correct? 1 and 2 only, 1 and 3 only, 2 only, all three. So you can answer into the comment section. And if we'll talk about the concluding remarks of this whole discussion, then we had discussed reports about the staple food and how there can be crop intensity, crop diversification, why there is so much stress on water, why there will be impact on the impact of climate change on the food crops. We had also discussed WPI, CPI, retail inflation. Then we had already covered that changing stances of the RBI, what are the different stances in our daily program. So do check that also and try to connect all these topics with each other, so that whenever we see that there is a rise in food prices, then it is related to the retail inflation. Whenever we see any kind of news, then we try to find out the links that why such things are happening. And in economy, one factor is responsible for the another factor. So you have to link all these things and then you have to prepare your topic. So that's it for today's session. I hope you like this session. If you have any queries related to this session, kindly ask into the comment section. Thank you. Have a nice day.
For more informative content, like, share and subscribe, and do not forget to press the bell icon to get the notifications.